Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachurdes, and joining me is Senior Investment Analyst Marios Hadjikyriacos. We'll be discussing the upcoming U.S. Nonfarm Payrolls report and the outlook for the dollar. So Marios, the jobs report for August is due out on Friday. What are we expecting, and how do you think these numbers might affect when the Fed decides to announce a tapering decision?
Hello, Maria. I believe the upcoming jobs report is going to be absolutely crucial for when the Fed decides to push the taper button. So the forecasts point to another very solid report. Non-farm payrolls are expected at 750,000, and that would push the unemployment rate down another 2 ticks to reach 5.2%. Now, if those numbers are met, that would leave the US economy around 5 million jobs away from a full labor market recovery. Subtract from that around 2.5 million people that retired early because of the pandemic and are not coming back, and that would really leave the US economy around 2.5 to 3 million jobs away from a complete recovery. Now, that would be absolutely great news for the Fed, and if the numbers meet or exceed expectations, I believe the Fed's September meeting would be live in the sense that we might actually get a tapering decision.
Okay, so taking all this into consideration, what's the outlook for the dollar in both the short and longer term?
Well, in the short term, everything is going to depend on the jobs report, right? In the longer term, I think that the outlook is quite positive, and here's why. We've seen some signs lately that the US economy hit a speed bump. The Delta outbreak escalated, and we saw some early signs that this spilled over into economic activity. For example, consumer confidence and the market PMIs fell very substantially in August. And as a result, we saw Fed Chairman Powell hedge his bets. He told us that the tapering process could still begin this year, but that would ultimately depend on the virus and how much it impacts the economy. Now, having said that, the US economy is still really strong. The economy is already much larger than it was before the crisis. There are now more open jobs than people unemployed, and Congress is about to unleash another multi-trillion spending package to power up growth. Now, on top of everything, inflation might not cool as quickly as the Fed thinks. We've seen supply chain problems getting worse lately with shutdowns in Asia. Shipping costs are skyrocketing. Delivery times are lengthening. And the final piece of this puzzle is that the Supreme Court has just abolished the ban on evictions. So that means that rents could finally start to play catch up with house prices that have soared this last year, and that could allow inflationary pressures to broaden out. So long story short, I think it's only a matter of time until the Fed tapers. I don't think it really matters whether they announce it in September or November. What is really important is that they are years ahead of the European Central Bank and the Bank of Japan in this process. And ultimately, that argues for a stronger dollar against the euro and the yen.
Marios, thanks so much. And thanks for joining us at xm.com.